This video is all about the top 7 Florida cities that could be headed for a housing crisis, at least according to certain market analysts, who are predominantly looking at vacancy rates and mortgage delinquency rates. And both of those metrics are certainly leading indicators that are critical to be aware of if you're thinking about buying or selling in any one of these cities. And I will do a deep dive into those metrics in each one of these 7 cities, but I'm also going to take it a step further and show the real data of what's happening in each one of these cities too. Because the headline news is terrifying and the data tells a completely different story. And the numbers don't lie. If you're new to the channel, welcome aboard. My name is Chris Igo. If you're a returning viewer, I appreciate your participation in our journey. But before we go granular and analyze the data that exists, the most current data that exists, because the MLS won't publish what happened in March until the end of April. But as a boots on the ground operator of a high performance real estate team, I know exactly what's happening right now. And of course, I'm going to share it with you so that you can make the best decisions for yourself, for your family, and for your financial bottom line. But let's start at the top. Let's start with the macro picture because breaking news, the United States housing market has changed and it's on the uptick.
Welcome back to Squawk. A turnaround in the housing market. We've got some new numbers out this morning. We want to get straight to Diana Olick, who joins us with them now. Good morning.
Good morning, Andrew. You know, we were talking about this possibility after we saw those very strong January and February sales numbers, and now here it is. After 7 straight months of declines, home prices nationally rose 0.16% in February. That's seasonally adjusted, and according
But wait a second, the market is crashing. It's the end of the world. It's 2008 all over again, right? Well, maybe at some point, but it certainly hasn't happened yet, and it certainly did not happen in February. And while I suspect the pain of recession is absolutely going to squeeze the consumer and create forced and distressed sales at some point in the future, as of February, we just broke 7 consecutive months of decline. We're on the uptick nationally. And despite all the fear mongering that's happening in terms of what's happening in the Florida housing market, there is absolutely no housing recession in Palm Beach County. And to be clear, the market dynamics have absolutely changed. Gone is the frenzy that once was when interest rates were under 4%. There's significantly more supply, and homes are sitting significantly longer, and overpriced listings absolutely don't sell. And thankfully, buyers now have all the leverage. So despite the uptick in home values and home prices, we're back in business, baby, and we're able to go out there and negotiate the best deal possible in today's market. And we've negotiated some whoppers over the last quarter, negotiating hundreds of thousands of dollars off original list price, and in most instances, setting up our buyers with significant instant equity to the tune of hundreds of thousands of dollars. And while I obviously can't guarantee that I can do that for everyone, we are finally in a market where there's more supply and there is a target-rich environment of homes in which for us to negotiate. But let's get back into the national picture before we break down the 7 cities.
to a new report from Black Knight. Might not sound like a lot, but it is the strongest single month gain since last May. Prices are now down 2.6% since last June, but they had been down 2.7% in January. So why are prices back on the upswing? Simple. Mortgage rates. The average on the 30-year fix just took off last summer, which put the brakes on sales, so prices began coming down. But then rates dropped in December and January. Sales surged and prices turned higher again. But rates did come back up again toward the end of February and have been kind of bouncing around due to the banking crisis. Sales, though, still held. Not as strong, though, as in January. But one thing that hasn't changed is very tight supply. New listings in February were down 27% from pre-pandemic levels. Still, it is just amazing how quickly this market is turning on rates. 39 of the 50 largest U.S. markets saw home prices rise in February, but just 3 months before, prices were falling in 48 out of 50 markets.
39 housing markets out of 50 are appreciating, going higher. And as she mentioned, it's due to supply and demand. And obviously, if interest rates uptick and they go significantly higher, there will be less demand from buyers. But make no mistake, real estate and housing will always trade. It's always a good market for someone. But I can promise you, today's market is so much more fun for me to advocate and negotiate for my clients than the recent past, because back then there was no negotiation, there was no leverage. Every single house that we wanted to show already had 10, 15, 20 other contracts that were competing against each other and bidding the price higher, waiving all the contingencies. Well, those days are over, thankfully. But rising mortgage interest rates are no bueno for anyone and will definitively impact the market over time.
It shows you just how price sensitive people are, because the market, of course, Andrew, is still quite pricey.
And that last statement is 100% true. Home prices are still pricey and they're continuing to up. Which brings me to the point at hand, which brings me to the 7 Florida cities that could be headed for a housing crisis, at least according to GoBankingRates.com. And to be clear, I've never heard of GoBankingRates.com, so it's not like I put a lot of stock in what their analysis is. But I do know that the perception becomes the reality. And if the perception of the consumer is that these 7 Florida cities could be headed for a housing crisis, well, then I want to do a deep dive to see exactly what's happening in each one of these markets so that you know the truth and you can advocate and negotiate for yourself the right way. And I've done tons of content as to what the future could look like when the pain of recession hits in the future, if and when things get really bad. And I'm fully aware that the cost of living in Florida has increased dramatically over the last few years. Home insurance rates have gone through the roof. And yet new legislation has been put in place to bring back competition, but that takes time and that's not today. As of today, home insurance in Florida is very expensive, as are property taxes. Property taxes in most places have skyrocketed. And so when you're thinking about buying a home, it is critical to understand what all the hidden costs of buying the home are. And if you're working with the right real estate professional, they will do a deep dive analysis of exactly what they are in totality so you don't have sticker shock and you never feel house poor. And while I don't have a crystal ball and I'm not Nostradamus, I do know that the pain of recession is worsening. And I do know that unemployment is on the uptick. And the cost of capital is getting more expensive. And while I suspect at some point in the future, there will be many folks and many investors that get squeezed, which will radically change supply and demand, which in turn will radically change what the housing market looks like. Let's look at these 7 cities to see what's happening right now. And as you can see on the screen, these are in descending order. We're going to start at Pembroke Pines. And according to GoBankingRates.com, homeowner vacancy rate is 0.9%. Percentage of mortgage delinquent 90 days is 0.7%. And while I'm certainly not going to minimize what the impact homeowner vacancy rates or minimize the impact delinquent mortgages will have on the housing market over time, these numbers, which are important to track and be aware of, are so negligible that this article, which is obviously intended to get a lot of clicks and views and scare people, is total BS. But Chris, you're a real estate professional. You want us to buy something right now. You're desperate to sell a house, right? Wrong. I'm desperate to ensure that you know what's actually happening in the housing market so that you can make the best decisions for yourself, for your family, and for your financial bottom line. And despite the scary, negligible numbers that were just shared, here's what happened in Pembroke Pines as far as single-family homes are concerned in February. And please keep in mind, I'm going to share March next. But as of February, closed sales were down 31%. Well, that trend is true everywhere. There are far less sales that are happening in today's market than the recent past. But you can clearly see that the median sales price and the average sales price have skyrocketed 22.5% and almost 21%. And to be clear, this is a month old. We're going to cover March momentarily. And if you've been watching for a while, you know that I expect we're going to see single-digit growth across the board in most markets for the foreseeable future. But I was dead wrong. I clearly underrepresented the appreciation because in February in Pembroke Pines, which is allegedly at risk of crashing, sales prices skyrocketed and inventory remains a very big issue because there were 40% less new listings, which means that the supply of homes for sale is challenged, which will likely insulate prices for the future. But you can also see that the inventory of homes for sale has upticked almost 28%. Which is great if you're thinking about buying because it does mean you have more leverage and more options. Which brings us to months supply of inventory, which upticked almost 78% to 1.6 months. 1.6 months is a strong seller's market. But that was February and we're in March. And as you can see on the screen, which is more recent relevant data provided by Trend Graphics, you can get a restatement of what happened in February. But I doubt many people care because that's a lagging number. That's old news. Now, because as of the making of this video, it's April 3rd, and there have been no closings at the beginning of April in Pembroke Pines, these numbers are completely distorted. But what you can see is the current snapshot for April of 23 versus 2022. And what you'll notice is that the active for sale price is down 2.2%. And the active sold price is down 100%. And unlike bankrate.com, I'm not trying to scare you, there haven't been any closings so far this month in Pembroke Pines. But if we go a little bit further back and look at the current versus previous year to date, what you'll notice is that the active average price is down 2.2% and the active sold price from January 23 to 4/2/23 versus January 1/22 versus 4/2/22 is up 8%. Single digit appreciation in Pembroke Pines. And as of today, Pembroke Pines is low risk. It is not headed for a housing crisis up until it is. And when things change, I'll be the first one to let you know because I'm committed to telling you the truth. Which brings us to number 6 on the list, which is Hollywood, Florida. And according to the article, the homeowner vacancy rate is 1.6% and percentage of mortgage delinquent 90 days is 0.6%. And to be clear, these are numbers that we must understand the trend about, but in order to do so the right way, we need to know what the hyperlocal market actually is in Hollywood. And in February of 2023, which again is a month old, and I will cover the beginning of April, single-family homes took a big hit as far as closed sales are concerned, down almost 50%. But the average and median sales price in Hollywood, Florida exploded, up 41.5% and almost 47%. 47% appreciation in Hollywood and 14% less new listings. But here's the good news if you're thinking about buying a home in Hollywood, the inventory of homes for sale increased almost 70%. So while prices may be insulated due to a shortage of supply, buyers have way more leverage to negotiate much better deals in today's market. Which brings us to month supply, which is upticked 130%. It's now at 3 months of inventory. 3 months of inventory is still a seller's market. But this is February and we don't want to see old data. We want to see what the market looks like today. And you can see a restatement of what I already shared in the box to the right, but that's old news. It's far more important to understand what's happening right now today. And if we look at today's stats, what you can see is that current versus previous year to date, from January 23 to April 2nd, 23 versus the same period of 2022, the average list price is up 3%, but the average sold price is down 6.4%. So Q1 in Hollywood is actually a decline of 6.4% for average sold price. Now, does that mean that this city is headed for a housing crisis? Yet to be determined, I don't know, but the trend is certainly not your friend if you're thinking about selling. And it's certainly your friend if you're thinking about buying. But it's critical that you work with the real estate professional that understands the hyperlocal market so they can advocate and negotiate for you the right way. Which takes us to number 5 on our list, which is Jacksonville, Florida, which has a homeowner vacancy rate of 2%. And the percentage of mortgages delinquent by 90 days is 0.6%. Again, important to know these trends and to track them, but I'm far more interested in what the actual housing market data is versus some BS nonsense that bankrate.com is putting out. But as you can see, in the Jacksonville metro, which is comprised of Baker, Nassau, Duval, Clay, and St. Johns County, or I should say counties, closed sales are down 21%. Average and median sales price are both on the uptick. Single digit appreciation, just like I expected, of 2.5% and almost 7%. But new listings are down almost 12%. And the active listings, the supply of homes that are for sale right now unsold, is up 126%, which is great news if you're thinking about buying, and not so great if you're thinking about selling. But bankrate.com was alluding to the fact that there is a foreclosure issue, that mortgages are delinquent. Let's look and see what the distressed sale market looked like in this metro. And what you can see is that the foreclosure market was down 25% in February of 2023, and short sales were down 50%. And to be clear, both of these numbers are negligible. So despite whatever the percentage that bankrate.com quoted, there were 3 foreclosures in this metro. There were 4 short sales in this metro. And while it's factually true, if the world goes to hell in a handbasket, then all housing markets are at risk of a housing crisis. But as of today, Jacksonville seems to be pretty low risk, which takes us to number 4 on our list, which is Miami, Florida. Homeowner vacancy rate, 2.2%. Percent of mortgages delinquent 90 days, 0.6%. Both of which are statistically negligible, but let's see what's actually happening in the Miami housing market. And to be clear, I am not a member of the Miami MLS, so I don't have access to the most current data that exists in the Miami housing market. So if you're thinking about buying or selling in Miami, I am not your best advocate, although I am absolutely happy to connect you with someone who is. But the data that we're looking at for Miami, and you can see that it covers a big metro, which is comprehensive and covers other markets too, like Palm Beach County and Broward County. Miami-Dade is part of this metro. And while I suspect the trends in Miami are similar to all the other markets that we've covered, what I'm about to share is not accurate because it's not hyperlocal. But I'll share it anyway because the trend is likely to be similar. And what you'll see is that in the Miami-Dade metro, closed sales are down 26%. Median sales price is up 4.2%. Average sales price is on the downtick in February, down 3.4%. And new listings, new homes coming on the market for sale, took a big hit, down almost 19%. But the supply of homes unsold, meaning your competition if you're thinking about selling, and meaning your choices if you're thinking about buying, has exploded, up 92.3%. And the month's supply of inventory has increased too, up 153%. But 3.3 months is still a seller's market. But to be clear, buyers have the leverage. Buyers have the ability to negotiate much better deals because there are far more choices. But getting back to the original title of the article, which was Cities in Florida That Could Be Headed for a Housing Crisis, while I don't agree the markets that I've covered previously are at high risk or really much risk, the Miami market is unique. And I suspect the Miami market, specifically the condo market, I suspect that's much higher risk than any other city we've covered so far. And while bankrate.com shared their metrics as far as mortgage delinquencies are concerned and vacancies are concerned, the distressed market in Miami in February looked like this. Foreclosures were down 20%. Short sales were down 83%. 20 foreclosures and 4 short sales is statistically insignificant up until it's not, which takes us to the number 3 city on our list of Florida cities that could be headed for a housing crisis, which is Gainesville, Florida. Go Gators! And in Gainesville, according to this article, homeowner vacancy rate is 3.6%, and percentage of mortgages delinquent by 90 days is 0.6%. Which, again, I believe is statistically insignificant, but let's see what the Gainesville housing market data actually is. And similar to other markets that I am not a member of the MLS, I don't have access to the most recent hyperlocal data. But the trend is important to understand. And what you can see is that in Gilchrist and Alachua County, which is the Gainesville metro, closed sales were down 20%. Median sales price was up 6.5%. But the average sales price dipped almost 3%. New listings, meaning the new supply of homes coming on the market, took a big hit, down north of 28%, and the active supply of homes for sale on the market unsold, big uptick of 55%. And predictably, so is the month's supply of inventory, which is up 80%. But it's 1.8 months. And 1.8 months is still a strong seller's market. So let's address the delinquent mortgages and vacancies, because the headline is meant to scare you and meant to lead you to believe that the distressed sales market is massively on the uptick. And what you can see in this chart is that's not true. There was one foreclosure in this metro, and there was only one short sale in this metro. And while I do suspect that the distressed sales market is going to change over time as things get worse, as of today, Gainesville is low risk. Which takes us to Fort Lauderdale, number 2 on our list for cities in Florida headed for a housing crisis. And what you'll see is that homeowner vacancy rate is 4.1%, and percentage of mortgages delinquent by 90 days is 0.6%. Well, let's do a deep dive into the housing market data that exists as of February 2023 in Fort Lauderdale to see if that's true. And what you can see is that closed sales took a beating, down 43%. But the median and average sales price tell two very different stories, with the median sales price being up 6.4% and the average sales price being down almost 8%. Negative 8% is no bueno. Negative 8% tells me that this market is very likely at risk. But let's keep in mind we're talking about February and we're in April, so we want to see what the most recent data is. And because I am a member of this MLS, but in February, new listings took a big hit, down almost 30%, and the inventory of homes for sale sitting unsold, which is your competition if you're thinking about selling, and which are your choices if you're thinking about buying, is up 64%. And the month supply of inventory upticked 147% to 3.7 months, which tells me that the trend in February is not your friend if you're thinking about selling, and it's certainly your friend if you're thinking about buying. And you can see on the box to the right what the February numbers are, but since I just shared them, I'm not going to insult your intelligence and reread them, because it's far more valuable for me to share with you what's happening right now. And as you can see in today's stats, covering the period from the beginning of this year up until April 2nd of this year versus that same time period in January of 2022, the average active price is down 11%. And the average sold price took a major hit, down 14.4%. Double-digit decline in the first quarter of 2023. No bueno in Fort Lauderdale. And while I know distressed sales in Fort Lauderdale are statistically insignificant, so I'm not going to bother sharing them because I don't want this to be a 3-hour video, I can tell you that Fort Lauderdale is at risk of a housing crisis. To what severity yet to be determined, I don't know, but the trend is not your friend if you're thinking about selling in Fort Lauderdale. And the trend is definitely your friend if you're thinking about buying. Which takes us to the number 1 spot, numero uno, Orlando, Florida. According to this headline news, Orlando, Florida is the number 1 Florida city that could be heading for a housing crisis because homeowner vacancy rates are at 5%. And the percentage of mortgages delinquent by 90 days is 0.5%. Now, to be clear, I am highly biased towards Orlando. My family and I go to Orlando all the time. My kids are young. They love going to Disney World, and we've got annual passes to go there all the time. And to be clear, this is a metro picture. I am not a member of the Orlando MLS, so I don't have access to the hyperlocal data that exists within the Orlando market. But I am highly connected with all-star professionals which service the Orlando market. But to be clear, each market within this metro is going to trade differently. And while I know there is a heavy investor market that exists in many of the Orlando metros, and there are lots of Airbnb owners who are rethinking some of their investment decisions. And despite the fact that Orlando is number one on this list in terms of being the number one city that could be headed for a housing crisis, I have yet to see any evidence of that. But nobody cares about my personal opinion. They want to see the numbers because the numbers don't lie. And here's what we have in Orlando, Kissimmee, Sanford Metro. And to be clear, this is a 5,000-foot overview. It encompasses Lake, Seminole, Orange, and Osceola counties. But you can see the trend confirmed that closed sales have taken a beating everywhere, and they're down almost 24% in Orlando. But the median and average sales prices in the Orlando, Kissimmee, Sanford Metro are both appreciating. 5.3% and 6.7%, which is similar to what I've been predicting all along. Single digit appreciation in most markets within the state of Florida. But there are a lot less listings. In fact, new listings are down almost 21%. And the supply of homes for sale, the active inventory for sale, which is your competition if you're thinking about selling and your choices if you're thinking about buying, has exploded by 122%. And the month's supply of inventory has skyrocketed up 172%. But it's still less than 2 months, 1.9 months to be exact. It is still a seller's market up until it's not. But despite all of that, Orlando earned the number one spot, being the number one Florida city, which could be headed for a housing crisis for a reason. And despite my anecdotal evidence and feelings about what the housing market looks like in Orlando, because I visit there all the time, distressed sales are on the uptick. And while the numbers are still small for now, that is certainly going to change as the pain of recession increases. But foreclosure sales in the Orlando, Kissimmee, Sanford Metro are up 70%, and short sales were up 200%. And while 17 and 3 are still statistically insignificant, that trend is certainly not your friend in the Orlando housing market. Now, to be totally transparent, I don't necessarily agree with the rankings on this list, but I will say to me, I think that the Miami market is probably the most challenged. And we absolutely need to keep an eye on the trend in Orlando. And there's really no nice way to say this, but Fort Lauderdale is at risk. But to what severity and when will it happen, yet to be determined, I don't know. But I do know I will continue to tell you the truth so that you are empowered with the best information to make the best decisions for yourself, for your family, and for your financial bottom line. Now, I hope you found this content valuable, and if you did, please subscribe to the channel, give it a thumbs up. If I can ever help serve or support you in any way, then please reach out directly and check out my next video because I suspect you will love it a lot. And until next time,